Ladies and gentlemen, please join me in welcoming Mr. T. Rabi Sankar, Deputy Governor, Reserve Bank of India. Welcome, sir. May I now request Mr. T. Rabi Sankar, Deputy Governor RBI, Mr. M.V. Rao, Chairman IBA, Ms. Ayako Suva, Chair IbFed, and Mr. Sunil Mehta, Chief Executive IBA, to join us on the dais, please. Thank you, dignitaries. May I now request Mr. Sunil Mehta, Chief Executive IBA, to welcome and introduce Mr. T. Rabi Sankar, Deputy Governor, Reserve Bank of India.
A very good evening to all of you. This indeed is a proud privilege for me to welcome our Honorable Deputy Governor, Reserve Bank of India, Shri T. Ravi Sankar ji, who is known for his straightforward views and audacity in the matter of banking regulation, technology development. Shri Ravi Sankar ji is a career central banker. He has been involved in a large number of major projects, including CBDC and payment systems, and taking care of a large number of verticals in the Reserve Bank of India. He also participates in a large number of international forums like Bank of International Settlement and various internal and external experts committees. He is driving the central bank in various areas, including CBDC and self-regulatory organization framework. Ravi Sankar ji, while deliberating in one of the conferences organized by IBA on banking technology, and we call it FIBAC, and he was the first, I think, the major regulator across the world who came out with the open views on the challenges being offered by the cryptocurrency. At that time, everybody was thinking that cryptocurrencies are going to replace the central currencies of most of the countries. And I think we were the first to listen to him, then the risk involved in cryptos and the way it can displace and it can destabilize the country's economies. And I think that proved correct with the course of time when the crypto exchanges failed and the people lost faith in many of the cryptos system which was evolving at that point of time. We all, Indian bankers, are very well versed, and I hope the IbFed board will get the advantage of his deliberations and they can ask questions to him. I welcome Chair IbFed, Madam Ayako Suva, also for this session, and our Chairman, Mr. M.V. Rao, for facilitating the entire hosting of this event and this program. All of you are here since morning and are participating in various deliberations, and I'm sure they are very full. So I welcome you all once again for this last valedictory session. I hope we all will be benefited from the learnings from Honorable Deputy Governor. Thank you, sir, for sparing your valuable time and with us today. I'll open the floor for you. Thanks.
Good afternoon. I think when Mr. Mehta was talking about audacity, what he meant was probably frankness. I'll take it as that. Uh, Ms. Suva, Chair, IbFed. Mr. Rao, Venkat Rao, Chairman, IBA. Mr. Sunil Mehta, Chief Executive, IBA. And Ms. Nayers, MD, IbFed. Members of IbFed and IBA Management Committee, ladies and gentlemen. It actually feels, it feels quite a privilege to be here, in a meeting of an international board of bankers, to be able to participate in it, to be able to talk on certain issues, on any issue, come to think of it, to such members, and probably be able to discuss a few things. The topic itself is, while quite broad, I would say is quite apt as well, contemporary issues in banking. I also see that you have had quite a few topical sessions covering climate finance, risk management, trade finance, consumer protection, things that are of increased relevance as we are moving ahead in digitization of all financial services, including banking. Now, globally, since the global financial crisis, now it seems like a long time back, crisis of 2007-8. Basically, from that crisis, the banking system has, emerged, and I dare say, stronger for that experience globally. Even in India, we have had, some problems. We have had a bad loan issue. We have kept that behind us, and now the banking system globally, as well as the banking system in India, is looking quite healthy in terms of all various parameters. Especially in India, we have a fairly ambitious agenda of becoming a developed nation in the next 20 years or so. And I think the banking system is well positioned and geared to be able to play the role that it is required to play for this agenda that India has. Having said that, nonetheless, there are very big changes that are happening. We have discussed climate is one of them. There are a lot of unknowns about what happens in climate change, which makes the challenge of dealing with it, both from an economist point of view or from the point of view of intermediaries like banks, extremely involved. How the banking system acquits itself as we go forward, apart from climate finance, depends a lot on what happens in one specific field, which is the field I thought I will focus myself today, and that field is technology. What happens there, how the banking system adjusts to it, and how the banking system is able to deal with it will probably define, the shape and look of the banking system in the future. I'll start off with one simple, example of that in the area of payments. Now, all of us know that payments is essentially a banking service. Other than the use of currency, payments, as we know, is essentially a movement of funds from one bank account to another. It is like deposit taking, like creating credit, a quintessential banking business. We have seen over the last half a decade to 1 decade that the role banks played in the payment space has undergone a big change, especially in India. Today, 80% of the transactions in the payment space happen through one system in India, which is the UPI system. The number of transactions in a day, as per the latest data, is about 450 million transactions. Now, clearly, all these are transactions in banks. All these are transactions from bank account to bank account. But all these are transactions where the initiative no longer is lying with the banks, with the banking system. The initiative lies with other technology players that have come in. And these technology players, these large technology players who have come in, have in fact played a huge role in democratizing payments, especially in India. Today, for example, you can see, you can make payments for 10, 15 rupees or even less, to a street vendor by scanning a QR code that it has. This was unimaginable a few years back. 10 years back, the only digital payment you could make was probably largely go into the banking system's, internet app and then make a payment. That you could do it in a few seconds using your cell phone in amounts that were previously unthinkable, extremely small amounts, goes to show that technology can give shape to areas of banking that banking itself would probably find difficult to imagine, let alone be prepared for. That is essentially what has happened. Now, we all know, we all know the background of how India has done as well as it has done in the area of payments. A lot of other things need to get into it. I'll probably come to it briefly about how is it that we see digitization in finance as well as in other areas grow at the rate that it has in India. I'll probably come to it a little later. But the point I'm trying to make here is that payments, the change in payments landscape, digital payments landscape in India is probably one example of how technology can change fundamental banking functions and how banks need to be prepared for it. Now, we are also seeing that in other areas. We are seeing that, for example, in small loans, in digital loans. We are seeing the role that technology has played. But the basic point, I think, is made, which is that banks need to be always alert to changes that is happening without them. By without, I mean outside of that sector. What's happening in technology. You see, the point we have to realize, and this is something, it's easy to say now with the benefit of hindsight that banks should have realized, but it's always difficult. But even at this point in time, I think it will, pay well to realize that your business could be affected by some other sector, some other industry, some other technology, when each of you is looking at very different things. The bank is looking at, let's say, margin, making profits. But you have players who have come into the technology space who are not looking at money. For example, the two largest players, which account for more than 80% of the volume of this 450 million transactions a day, UPI, get paid virtually nothing for it. So why are they doing it? They are doing it because probably they can use the data. Probably they can, cross-sell. Probably, they can use this data for targeted ads and other benefits. The point is, they are looking at a completely different thing. Banks are looking at a completely different thing. But you have a situation here where the business is pretty much out of the hands of banks. Now, that is what would require to be realized. The point that people could be looking at different things, but the effect could be on your business. I'll go to a second example, which is that of CBDCs. Now, we all know globally, every global financial agency, be it the World Bank, be it FSB, G20 or all agencies are looking at the benefits that digitization has brought to payments in the domestic sphere in many countries, including India. And they are trying to see if we can somehow export that to the cross-border space. Now, it is possible that technology is giving you many choices. One of the choices it gives you is CBDCs. Now, I have discussed this earlier. Since the audience is a little bit different, I would just state that once again, that the reason cross-border payments take a lot of time, the reason cross-border payments are expensive, is essentially because payment has to have a lot of stops before they reach from the sender's account to the receiver's account. It would go from the sender's bankers to its correspondent banker in some other country, to the banker of the receiver, and from there to the receiver's bank. And at every stage, time is involved, and at every stage, there is cost involved because every bank systems are being used. Now think, if it were possible to just hand over cash, we don't require a banker to intermediate handing over cash. The only problem is that to hand over cash, the sender has to travel to the receiver. Obviously, that's not possible. But with digitization of cash or currency, you have basically taken care of that constraint. It is possible to get the equivalent of a physical cash handover using CBDC across borders. It would not be necessary to have intermediaries in between through whom the process has to be done. It will not be necessary. It will not be necessary for the time that is required. It will not be necessary that the financial system, the central banks are open in the receiving jurisdiction. There is no need for a time zone. Time zone stops being a constraint. So CBDC is actually giving you a solution to the problem that the whole world is grappling with. How do I reduce the time and cost of cross-border transactions? But this is subject to a condition. And what is that condition? That condition is that every currency should be available in a digital form, at least the major currencies. In other words, all major countries need to have CBDCs. Now, I strongly believe that if something can be done, if there is a technology to do something more efficiently, you can put it off for some time, but eventually the more efficient choice will prevail. You can go back in the history of major technological discoveries or innovations. It took a long time before printing became commonplace, but that has completely revolutionized the way we learn, the way civilization has progressed. That took a long time, but the basic principle remains the same. If it is possible to do something cheaper and easier and quicker using a technology, then that technology will sooner or later prevail. And the thing that banks need to keep in mind here is that you have a close look at your system. Today it's possible that everyone who needs to who needs to make a payment cross-border has to walk to a bank. But just like it happened in the case of UPI, I think we should also be preparing ourselves for a situation where alternatives are possible, where a CBDC might be possible. Now, if we are not if you are not alert to these possibilities, I gave one example of CBDC. I have no idea what other technologies might be coming up through what other channels. I'm no expert in technology. But the basic point here is that banks need to be alert to that possibility that your business, just like you could be blindsided by some impact of climate change, you could be equally well blindsided by some impact that is happening in the space of technology. I'll take you to the next step, why cross-border transactions are in the payment space are expensive. That's largely because of the exchange cost of exchanging one currency to the other. Now, I've told it before, and I will repeat it again, that it is unimaginable that a market which has $700 billion of volume of transactions a day charges the kind of bid-ask spreads that the foreign exchange market charges from retail entities. You just have to look at the stock market to realize that the difference between a retail price and wholesale price cannot be this wide. Everyone sees that, everyone knows that. But we normally don't do anything because there's obviously no threat for that business model to change. I think it's important for us to realize the lesson that I have been talking about, that technology can come and change it. In fact, I have told this before, the technology already exists in India. There are participants from other jurisdictions here. They will probably be aware, but nonetheless, let me emphasize that when we introduced an order matching trading in government securities in 2005, there was no other market anywhere in the world, I'm talking of government securities market, anywhere in the world, where trading of any significance happened other than in the OTC market. In fact, initially there was a lot of skepticism about how it might work in the government securities market. And it worked. In fact, even today, I think we are the only government securities market, major government securities market, where you can do a transaction on an anonymous basis, where you know every single trade of every single security that happens on a live basis. You have no other market which gives you that kind of transparency, where all government securities transactions are settled with central counterparty guarantee, have been settling since 2001, if I remember the year right. The rest of the world woke up to central counterparties after the global financial crisis. We have already had experience with that for 10 years. So, it is, we know that common, normal wisdom aside, different technologies can work. Someone just has to try it. I think the same thing goes with foreign exchange market. There is no reason why price discovery has to necessarily happen for a customer with a bank. It can happen through a platform. There is no reason to split an economist's order book, as it were, of foreign exchange between each bank. You are basically splitting liquidity and supporting what is essentially not very efficient pricing. It is possible to put all of them on a screen, transact with each other, and get a price which is which is not significantly any different from what is called interbank pricing, irrespective of the size of the transaction. Now, I know that many people in the fintech space are looking at these possibilities. And I think, this is the sort of risk that banks need to keep banks need to be alert to and manage. Now, it may not happen now, it may not happen in the next few years. It is going to happen eventually. And at that point of time, I think I don't want banks to be in the same position they are today vis-a-vis UPI. Fundamentally, therefore, technology can make changes that we just can't think. All of us have, because of digitization, all of us have systems. We really don't know how artificial intelligence is going to affect our systems. Everything that happens on an IT system, on an information system. We need to be aware of the risks. Everyone is aware of cyber risks. All entities are taking their risks. All regulators are taking action to minimize those risks. It's good to be prepared, although I understand the basic principle underlying all this is it's not a matter of if, it's a matter of when. And therefore, agility and being able to quickly recover and resume operations is the core of managing the risk of cybersecurity. We all know that. We all know that artificial intelligence poses a risk which is not very different from climate risk, in the sense that there are many unknowns. We really don't know what might happen. We really do not know how close we are to a breakthrough in quantum computing. We do know that it will probably make most cryptography that we use in IT systems today irrelevant. But we have very little idea of how we can be prepared for it. Now, these are things that is happening because of technology. These are things that, it's not just banks, it's everyone, every business, every individual, everyone, in fact, who is exposed to these risks. But specifically for banks, given the more than significant role they play in economic development, it is important that they be aware of these technology changes. It's all very, good, and that's how things ought to be, about the benefits we can get from artificial intelligence, and can I use an AI system to reduce frauds, or can I use an AI system to identify regulations or any of those things. Yes, you can use all of them. If you can use an AI system to beat the world chess champion, I'm sure you can use AI systems. So many of these things. At the same time, I think everywhere there should be this thinking that what are the risks that could arise. I once recently visited a regulator outside India. When I went in, the head of that regulatory body came to meet me. He said, I was just spending some time where my head of IT was showing me a deep fake of me giving a talk which I never did. And it was scary. And then he asked, what is your policy for AI? They are trying to figure out what the AI policy should be. Now, this is not just a regulator. This can happen to everyone. Everyone needs to focus on this. And, banking system also needs to focus on this. These are some of the changes that are happening in the space of technology that I think banks will have to deal with. And going forward, I think how banks, pan out or evolve will depend a lot on how banks react and adjust to these changes. You can react, you can be proactive in how you adjust, or you can just react to stimulus coming from the rest of the technology sector. But the paths that will emerge in these two cases could be very different. Therefore, I think it is incumbent on us all, banks, industry bodies like IBA and IbFed, all of you will have to play a major role. The regulators as well will have to play a major role. Governments, everyone needs to play a major role in ensuring that the adjustment to technology happens in a desirable manner, and the pathway that we take is as as frictionless as can possibly be. I know I told that I'll talk a little bit about what is the strategy that India has followed in achieving the level of digitization, but that sits very oddly with what I'm speaking. So I'll probably keep that aside for Q&A. And maybe if there is a question, I'll try and answer that. But my basic message is simply this: that technology is changing very rapidly, very fast, in ways that we do not understand. And if we don't have a choice other than to react or proactively respond to those changes. How we do that will redefine banking the way it is in the future. Thank you.
So now it's open forum. Audience can ask question.
Yes, please.
Can we have the mic?
First preference to be the IbFed board members, maybe you are our guest.
Yes, thank you so much, Deputy Governor. So I would like to also perhaps challenge yourself, because we as banks love to be challenged. But, a couple of years ago, it was actually the central banks that were challenged by the initiative of Mehta. And what followed was
by the
Mehta and Facebook are launching an own currency. And then, of course, there was a huge number of exchanges. So cryptocurrencies followed, the global stablecoin. So you didn't say a lot about cryptocurrencies and the initiatives that have been taken by major banks as well to create an own digital currency. So you might be willing to say a few words.
Thank you. You see, it feels a little bit odd talking about cryptocurrency initiatives taken by banks. The reason, I'm not saying they don't, they do, but the reason why it sounds a bit odd is the underlying, I think many of you might be aware, nonetheless, let me just repeat it. The underlying philosophy of cryptocurrency is to bypass intermediaries. Right? If you look at Bitcoin, the initial document of Bitcoin said that it is a peer-to-peer transfer platform for peer-to-peer transfer of money without an intermediary. So if we are talking about cryptocurrencies as they evolved, as it was being discussed, that they will make intermediaries redundant. They will make trust. It is the technology that will provide the trust. You don't require other bodies to provide you that trust. In fact, all this talk about Web3 or the DeFi, decentralized finance, is essentially about a world that one is looking at where you don't need intermediaries. In other words, you don't need banks. Money can move without banks being there in terms of, for the purpose of payments, that you don't require intermediaries. Now, clearly that has not happened. And why it feels odd, it is that, it is those intermediaries who are using the technology to solve, find solutions to other use cases. But having said that, the technology itself could have uses. I'm no expert on technology. It is for the ecosystem to decide on which technology is useful and which technology needs to be there. But what we have seen is that the purposes for which cryptocurrencies have largely been used, it's been used for many illegal activities. It's been used for those purposes. It's been, where it is not used for illegal activities, it's been used for purposes, of investment. If you read the Bitcoin document in the beginning, it was just a platform to enable transfer. No one really realized at that point that you would have a Bitcoin which will be worth thousands of dollars. And we have gone very public with the observation that there is basically nothing of value underlying any of these. So while the technology can be used and technology can find use cases, like I said, we don't really see a use case for cryptocurrency as a financial instrument. We don't see that use. One of the use cases during discussions that others tell us is that it can solve the problem, like stable coins, for example, can solve the problem of cross-border payments, the cost and time of cross-border payments. But the response that I always give is, if two countries have CBDC, the solution will be far more elegant, far more desirable, will be far more cheaper, and will be far safer, because these are the liabilities of two governments that is exchanging hands. So, while we don't really see any use case of cryptocurrencies that cannot be addressed through the digital payment system that we have today, including the possibility of a digital currency, I'm sure, I'm aware of many banks using the technology to solve or find solutions for problems. That involves a smaller group of banks and so on. But the technology can always be used. We have nothing with respect to the technology. If it's useful, it can be used. As far as we are concerned, we are finding that this technology, this distributed ledger technology, has a constraint. If you are thinking of population scale, population scale solutions, like for CBDC that we are seeing. But I'm sure it can be used for other technologies.
So who would like to ask the second question?
Could you talk a little more about the next stage of your CBDC roadmap and how you see it developing? The governor said yesterday he was talking about imminent introduction of programmability around the CBDC pilot, and he also said that you weren't, I think his expression was, you weren't in a tearing rush to see it turned into a national project. But give us some idea of the roadmap and the key developments and the timescales.
Yeah, I would have liked to preface with that, which is that we are not in any particular hurry to ensure that it takes off, because we understand the risks that it might have for banking system. We need to understand what impact it will have on credit creation by banks, deposits of banks. We need to understand what impact it might have on monetary policy transmission. We need to understand all that before we actually can have that operating as a full-fledged population scale payment system. But having said that, given the benefits that it could have, there are many domestically, and specifically given the benefits that it could have in the cross-border space, we are absolutely certain that there are use cases that the rest of the financial system will not be able to tackle as well as CBDCs can. We want to have a pilot to try out all of them. In addition to using the pilot to try out various technologies and to try out and to study their impact on behavior and so on, we are particularly keen to look at how these use cases get established. You see, one of the questions many people often ask, and they ask me, is that you have UPI. I can transfer money in a few seconds. So what is the additional advantage of introducing a CBDC, a digital currency? I think the use cases we are targeting is essentially intended to establish those kinds of benefits that CBDC might have. Two specific areas which we announced recently where we are trying to look at uses is in programmability, because it's a digital token, you can program it to serve the purpose for which it can be spent, and it can be spent for no other. And the other is whether we can get a solution to using digital payments in the offline mode. Now, if it is UPI, which is, as I said, movement from one bank account to another, doing it in an offline mode seems very difficult because you need a constant assurance that there is enough balance from the account that it is moving. Whereas if it's a digital token, you can develop technologies to authenticate transactions even in an offline mode. Now, I'm not saying we have a solution to that. I understand there are various solutions that can be tried out, but that's another area where we are trying out what possible uses can be there. The whole purpose is to show that in addition to the long-term use of cross-border, imparting efficiency to the cross-border payment space, we are looking at, establishing and demonstrating use cases that is not clearly possible within the, digital ecosystem that we have. Thank you.
We can have one or two more questions. Okay, ma'am.
My name is Neha Kumar, sir, and thank you for that, wonderful presentation and intervention. And you alluded to the fact that in some cases, AI and climate risk are similar. And my question to you is bringing the two together, both in terms of risk identification as well as opportunity or access to climate finance. Technology and AI, I think, is proving to be an emerging tool when it comes to assessing physical risks to a granular detail. And I think in India, it really, really holds that, potential of really, democratizing this technology to the extent possible for the reason of data granularity that the financial institutions would require. On the other hand, it is in terms of climate finance and making that accessible. You mentioned that fintech in one way could also bypass the role of intermediaries. And if you put the AI on the risk together, in agriculture sector, we have weather forecasting systems which are completely mobile based. And if you put a fintech solution to it, which basically gives you immediate cash through without going through the intermediary, how would you see this as both a challenge to the traditional banking system as well as an opportunity where the banking system and the fintech would more collaboratively work together? Thank you.
In fact, the global effort among the AI ecosystem to lay down basic ground rules, basic safety measures that we have seen in the last 1 or 2 years is premised on one simple truth, which is that notwithstanding the risks that AI can pose, especially if it gets beyond the point of what they call singularity, especially if it becomes better than humans in thinking. The reason we need these guardrails is because it is impossible to not use AI because of the benefits it has. And those benefits could go to to studying weather patterns, to studying large amounts of data to prevent frauds in the system, to anything. You can virtually think of anything which involves a decision making process. They can probably do it much quicker, and they are improving day by day. The AI systems are improving day by day. So yes, they can be used. They can be used even to tackle the risks that come from climate change. We don't know. Maybe they can they can completely change our approach to climate change. I have no idea, but it's possible if they can think that that well, that quickly, that fast. So make use of all the benefits that it has. At the same time, understand the risks that it can pose. So the fact that a technology can be used for something good will also mean that the technology can be used for something bad. So as systemically important organizations, I think banks will have to be constantly, look at that. You can use AI to spruce up your cybersecurity defenses. But then it will be some other AI system which would probably be attacking you. It's a good idea to be alert to those risks. That was my basic point. My basic point was not that AI does not have users. It has users which we just cannot deny, which we just cannot not adopt. But we need to be aware of how it will impact our own system, our own businesses. Thank you.
We can have one more questions. Okay.
Probably a long day, so everyone must be tired. Thank you so much.
Thank you, sir. It's always an honor to have you with us and to hear your insights. Ladies and gentlemen, may I now invite to the dais Mr. Madhav Nair, Honorary Secretary IBA and CEO India, Bank of Bahrain and Kuwait, to please give the concluding remarks and propose the vote of thanks.
Good evening, all. Mr. Rabi Sankar, Deputy Governor, Reserve Bank of India. Ms. Ayako Suwa, Chairperson, IbFed. Ms. Nuance, Chief Executive Officer, IbFed. Mr. Rao, Chairman, IBA. Mr. Sunil Mehta, Chief Executive, IBA. Members of the IbFed delegation. Managing Committee members of Indian Bank Association. And other distinguished members of the banking community, ladies and gentlemen. Indeed, we had a great day of deliberations today, starting from the inaugural session, wherein we had the welcome address by our Chairman IBA, Mr. Rao, followed by Ms. Ayako Suwa, IbFed Chair, for her opening remarks. We are also extremely thankful to Shri Amitabh Kanji, though he couldn't come in person, but he virtually met us and gave his keynote address. We had 4 engaging topics for discussion, and I'm extremely thankful to all the expert panelists who made these sessions very engaging. I'm grateful to the officials from EY, Cyril Amarchand Mangaldas, McKinsey & Co. and BCG for spearheading the discussions in each panel. Finally, it was indeed a great pleasure to have our Deputy Governor, Shri Rabi Sankar, in person come and visit us and give his thoughts on technology. It's always been wonderful hearing him, and we have had these opportunities organized by IBA in the past too, wherein he spoke about CBDC. And indeed, like Mr. Mehta said, he's always been very passionate about technology. Sir, one quote which came into my mind when you spoke was from Mr. David Embraer, who is a fintech influencer from UK. He said, technological innovations will be the heart and blood of the banking industry for many years to come. And if banks do not make the most of it, the new players from fintech and large technology companies surely will. And indeed, I think that's what you also sort of alluded to, that the banks need to know how to deal with technology, as it will shape the role of the future. And actually, the technology players have indeed democratized payments, and we in India have seen what has happened with the number of digital payments which are taking place on a daily basis. It was also heartening to note how he covered the role of CBDC, and I think the way RBI is cautiously moving forward on that, I think that would be a future, and possibly has also left a thought for us banks to see use cases on the role of CBDC. Indeed, sir, I sincerely thank you on behalf of IBA for attending this big event which IBA is hosting, IbFed board. And it was indeed a pleasure always to hear the regulator in person speak about issues like technology which are really close to everyone. I also take this opportunity to thank IbFed board members, managing committee members, and other invited guests who have been present and patiently have listened through the entire day's deliberations. We sincerely appreciate Hotel Trident for the excellent hospitality arrangements. And I must not forget to thank IBA team, Indian Banks Association team, who is hosting IbFed under the leadership of Mr. Sunil Mehta, the Chief Executive, and Mr. Gopal Bhagat, the Deputy Chief Executive, and the entire team of IBA. They have really done a wonderful job over the day and a half. And I think tomorrow also there is yet another, the IbFed board meeting is taking place. I think the entire sessions were curated by IBA, and they really took time to do this, but I think it has been a great job done by them. A big round of applause to the IBA team. I once again would like to conclude, and my sincere regards and thanks to our Deputy Governor, Mr. Rabi Sankar. He also patiently took many questions, which is again a privilege to us that we could ask questions directly to him. Once again, a big thank you, sir. Thank you.
Thank you, sir. May I request Deputy Governor, sir, and other dignitaries on the dais to stay back for a group photograph, please. I request Mr. Madhav Nair and Ms. Hedgewiz to join us on the dais for a group photograph. And with this, ladies and gentlemen, wishing everyone a pleasant evening. Thank you all.